The bourse unable to gain any traction, it seems, despite the spate of strong earnings releases. And we've heard traders saying that technicals are bearish as well. What's your view on the markets right now?
Well, it's just what I've been saying for a while. I think inflation is going to be a big problem. Real interest rates are probably going to revise upwards, and that you could see an impairment of value across board on all asset classes. But there's also one interesting dynamic. The real estate sector is probably pulling a lot more capital than it usually does. So you're seeing an outflow of cash from probably other markets to that market as well. So those twin dynamics are putting a ceiling on the market right now.
Let's take a look at specific stocks. I mean, we had Imara Africa cutting Safraicom from buy to hold yesterday. Market reaction to that news?
Well, I don't know what to make of that because it seemed as though Safraicom were bottoming out, and that might pick up momentum. And in view of the new numbers released through the media, we saw that Safraicom has lost market share, but in absolute terms, the amount of clientele has actually grown. So in revenue terms, yes, that might come down, but it also depends on the product offering, and also you might actually see increased usage by their clients. So it might actually improve revenues in the long run, even though in the short run it might dent the earnings of the company.
Johnson, on the back of that kind of prospect, I mean, we had a price target being set of 4.59. So surely now the time to be jumping in here. We've got that share price trading at 3.90, especially if you take into consideration that it's the outflow from foreign investors from emerging markets as a whole in particular that's acted as a strong pressure point over the most recent past.
Well, that again depends on the discount factor you're using, because like I'd observed in the past, foreigners have a lower required return on capital than we do. So on their exit, values must necessarily adjust downwards to fit in with the locals' required return of capital. So that disparity, and until somebody reconciles that in their analysis, it may be difficult to have just one target price.
Well, Nation Media, in the meantime, plans to develop a bigger news footprint and move deeper into the online sector to offset some of the soaring costs it's incurred as a result of newsprint that's been rising. What's the market made of its new business strategy?
This is still a new phenomenon, and it's been playing out even in the international sector, especially with new products by Amazon like Kindle and Apple's iPad. That is probably limiting the requirement of print. So it's an interesting development. It might lead to loss of jobs in some sectors, but for the investor, I think they should be jumping for joy because margins should improve. Distribution is cheaper. So it remains to be seen, but the market won't immediately absorb that because we don't still really know what that means in terms of numbers.
Of course, if we delve further into it, I mean, while going digital is likely to cut newsprint costs, being highlighted is that a lot of it is dependent on attracting investors to that online platform. How do you see businesses in Kenya responding to an online platform? Because I've been reading that while online readership has risen substantially, advertisers have not yet fully exploited this new media.
That is true, but there's a small problem in terms of e-commerce in Kenya. It's not really picked up yet, and payment might be an issue. So you could rate your viewership, your readership in terms of clicks per minute, but online advertisers still don't understand, perhaps they still don't understand the demographics as well. Maybe they're not able to analyze who's reading what and how in terms of demographics, and which also affects expenditures and such variables. So, and I think until they get a number that, I mean, they get numbers that they can back up with to present to their clients who want to buy advertising space, it might be a bit tricky right now just going up and saying, you know what, this is a new medium, we think you should be paying twice as much because of wider viewer readership.
So possibly a bit of an education that needs to be taking place there. Of course, the extra cost that Nation Media has incurred has been magnified by this weaker shilling against the dollar. So this is one business where a weaker shilling has impacted. What have you made of the comments out of the Finance Ministry now not to intervene just yet, that a weaker shilling is not necessarily a bad thing?
Well, I beg to differ, because if Kenya is supposed to develop further, if we are going to move into a middle income economy, we need to start looking at the manufacturing sector, and the supply lines for the manufacturing sector are necessarily international, because Kenya is not very well endowed with natural resources, and therefore a weak currency could impact badly. And I'm not even necessarily for the view that weakening currencies is good for economic growth, because what it just does is subsidize foreign consumption, and at the same time it taxes imports, which and for Kenya, our supply, if you look at what are the composition of our imports, you've got capital goods and oil, which are key inputs into the economy. Further, if you look at countries like Germany and even China right now, the currencies over time have been appreciating, but more and more they become exporting giants. So in my opinion, competitiveness of the economy is more important than currency manipulation.